Peklana, who's the investment manager at Global Equities of Ashburton Funds, joins us on the show right now. Veronica, it's good to have you on the show. What is it that you're advising clients to do at this point in time, given that now, purely from a risk perspective, with Greek swap deal getting through, there is perhaps more money being put into the system?
Yeah, it's a pleasure. Thank you. Essentially, we think the market will continue to consolidate here for a while. I mean, we had a strong start to the week. The S&P 500 broke out on the back of some positive news for the U.S. banks, with positive stress tests there, which will clear the way for more capital returns from U.S. banks to shareholders. On the other hand, in emerging markets, in China, Premier Wen, in his last speech before his exit, was potentially a bit more cautious on accelerating the lifting of some of these restrictions on property, and that obviously is holding the market back a little bit. But I think the eyes on the market for the rest of the week will really be on the US macro data coming in this afternoon, really a raft of macro data, including jobless claims. And then we obviously have in emerging markets the Indian budget tomorrow, where clearly the real question is whether real structural and fiscal reform can happen, although some of the measures might not be awfully popular in the short term. But again, India slightly lower, closing slightly lower today, given that the central bank there didn't go for a rate cut. Obviously India, it has to be seen in context, it's really one of the leading markets year to date in terms of performance. But again, the budget key tomorrow there.
What's the call really on India right now? What is it that you're advising clients? I mean, are you looking at booking profits in the region ahead of the budget? What is the broad expectation on what kind of stance would your fund be taking?
Yes, I think the fiscal policy to some extent is key, and we would expect a bit slightly more restrictive fiscal policy going forward, which would be good news if it's really combined with real structural reform. So if there are realistic targets, that could be a step in the right direction. But also, obviously, you have to keep an eye on monetary policy, and we do believe that there could be a rate cut coming at some stage, maybe mid-April, if fiscal policy is going in the right direction as well. And I think, those are the signs that we're looking for to really allocate, more capital into the region.
Okay, what quickly, in terms of the opinion that there is about emerging markets at this point, is your fund looking at increasing allocations, or are you staying status quo as far as money allocation is concerned?
Yeah, I think the market takes a bit of a wait-and-see approach because, of course, emerging markets have had a very strong start to the year, well into double digits in terms of returns. And so I think for both China and India, the jury is out in terms of the timing of both monetary and fiscal policy. If that comes in line with the expectations of further easing, and certainly for India moving into the right structural direction when it comes to fiscal policy, then that could be very positive because these markets obviously had a tougher time last year, and in broad terms, in terms of valuations, don't look really expensive. And so I think while there will be some proof needed and certainly some confirmation on the timing of some of these positive measures coming in, certainly towards the second half of the year and going into 2013, emerging markets could play a much bigger role in portfolios again.